What is happening with the residential real estate market? We get this question so often that we decided we wanted to put together this video structure to give you the information so you're educated and informed when it comes to decisions that you need to make for you and your family within residential real estate. Angela Schliinz, our Chief Operating Officer at Kris Lindahl Real Estate, she's gonna take a deep dive into all the market statistics. It will help you be better when it comes time to the decisions that you need to make in residential real estate.
In 2021, housing demand reached a 20-year high, while the number of homes for sale hit a 20-year low. That dynamic has been driving virtually every other housing indicator. For sellers, the year brought record pricing, blazing fast market times, offers over asking price, and a thin market where homes stood out. Driven by pandemic-induced changes to housing needs and preferences, we reached extraordinary levels in 2021. The inventory of homes for sale remained low, as home seller activity did not rise proportionately to meet this demand. New construction activity, while strong, remains limited by a combination of material and labor shortages. The strong sellers market of 2020 continued and even strengthened in 2021, with inventories remaining low and multiple offer situations common across much of the housing market. Multiple offers again drove prices significantly throughout the year. Pending sales increased 0.2%, finishing 2021 at 65,937 units. Closed sales were up 2.8% to end the year at 66,319. Kris Lindahl Real Estate finished the year with over 4,300 closed sales and a 45% increase over 2020 transactions. Seller activity was down slightly from 2020 and reached its lowest level since 2014, despite record sales. Some drivers include hesitance around showings during a pandemic, having no place to go, refinancing at a lower rate, and weak new construction activity. KLRE itself saw an increase of over 18% listing over 2020, with goals to see a 40% increase in listings in 2022. Comparing 2021 to the prior year, the number of homes available for sale was lower by 24.1%. There were 4,438 active listings at the end of 2021. New listings decreased by 1.1% to finish the year at 75,000 listings. Housing demand has rocketed over the years. Buyers were motivated with a desire for more space to work and learn from home. With historically low interest rates, more options due to remote work, and maybe even the fear of missing out. The condo and luxury 1 million plus submarkets outperformed other market segments. Sales would have undoubtedly been higher if we had more supply. Showing activity in 2021 continued at high levels due to strong buyer demands and low inventory of homes for sale. There were 1,550,000 total showings reported by participating showing services in the region, with a median of 17 showings before a pending, which was 6.3% up compared to 2020. Home prices were up compared to last year. The overall median sales price increased 11.4% to $339,000 for the year. Single-family detached home prices were up 12.1% compared to last year, and townhouses and condos prices were up 9.6%. Sellers received an average of 101.9% of their original list price of a sale, a year-over-year increase of 2.1%. The 2021 housing market was once again strong, both locally, nationally, and inventory shortages and high buyer demand continue to push home prices higher with multiple offers on limited number of homes. The common theme in this market was multiple offers, often above asking price, has allowed sellers to yield 101.9% of their asking price. That varied by area, property type, and price point. Sellers find that listings stand out in an unsupplied market, and propelled pricing was still important for the motivated seller. Historic high for this ratio of sold to list price reflects a highly motivated buyers as well as the imbalance between supply and demand. Homes are selling at the fastest pace on record. Between May and July, half of the homes sold in under a week, but more like 7 days for the entire year. That's down 90.5% from 2008. Here again, the inventory shortage and historic demand meant buyers pounce on attractive listings right away. Let's compare the numbers. 2021 compared to 2020. Sellers listed 75,536 properties on the market, and we saw a 1.1% decrease from 2020. Buyers closed on 66,319 properties, and inventory levels fell 26.4% to 6,742 units on average over the 12 months. Months supply of inventory was down 33.3% to 1.2 months on average. 5 to 6 months is balanced. Days on market decreased 34.9% to 28 days. On average, a median of 11, so we are down 38.9%. Changes in sales activity varied by market segment, and single-family sales were up 0.8%. Condo sales grew 25.1%, and townhome sales increased 2.6%. Traditional sales rose 3.5%, foreclosures were down 53.1%, and short sales fell 51.7%. Previously owned sales increased 3.7%, and new construction sales fell 6.2%. Our 1 million plus luxury sales surged 50.6% to a record high. In 2022, we expect to continue to see the trends that we've seen over the last 18 months, likely pushing the market higher still. As mortgage prices are likely to continue to rise over the year as well, housing affordability will remain an important factor to watch. I'm Angela Schliinz. Thank you for watching. That's what's going on with the market.